Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, September 30th, 2009. We begin today's broadcast in Europe, where the German economy saw unemployment decline by a seasonally adjusted 12,000 in September. That helped the unemployment rate decline to 8.2%. However, the data does not represent a turnaround in the labor market according to the Federal Labor Agency, which put out the report. The economic crisis will continue to pressure jobs, especially as government stimulus measures wane. European consumer prices fell more than expected in September, according to the flash or preliminary estimate. Prices declined 0.3% on an annual basis after falling 0.2% in August. The September decline would mark the fourth straight month that prices were negative and shows the downward pressure on prices from rising unemployment as well as lower oil costs. The euro-dollar pair rose overnight, setting an intraday high near 1.4675 as equities in Europe were higher. The bout of risk appetite helped the euro rally from yesterday's support near 1.4525, breaking above a downward sloping line of resistance. The New York Open brought with it some risk aversion on mixed U.S. news, which caused U.S. stocks to stumble out of the gate. A weak jobs report and a disappointing business climate index strengthened the dollar. However, by afternoon New York trading, the Dow Jones Index had erased its triple-digit morning losses to post a small increase, which helped the euro to reclaim most of its earlier gains. The euro-franc pair surged in today's trading, climbing 160 pips from its low near 1.5075 to set an intraday high at 1.5230. The sharp price action fueled speculation that the Swiss National Bank intervened in the markets to curb the franc's rise against the euro. The decline came as the ECB held an auction to lend financial institutions $110 billion at the current benchmark interest rate of 1%. In the U.S., the final version of second quarter GDP showed that the U.S. economy shrank an annualized 0.7%, following a 6.4% decrease in the first quarter. Today's figure surprised forecasts, which had called for a downward revision. Consumer spending was down 0.9%, slightly lower than the previous reported estimate, while a smaller decline in business investment on equipment and software than originally estimated also contributed to the improved reading on GDP. The positive GDP release was countered by two weak U.S. reports. First, the ADP jobs report disappointed, showing 254,000 jobs lost in the private sector, a figure that was weaker than forecast. Still, it was the lowest amount of jobs lost since July of 2008, though the report will raise questions about the strength of the recovery and cause economists to change some of their forecasts for Friday's non-farm payroll release. Secondly, the Chicago Business Survey took a step backwards in September, declining to 46.1 from August's 50 reading. The decline was led by drops in the new orders and deliveries sub-indexes, a disappointment following growth in both indexes last month. The employment index, meanwhile, continued to retreat at the August rate, while prices continued to firm. The dollar-yen pair did not have much of a reaction to the U.S. news, with the yen holding on to its overnight gains during the New York session. The pair found resistance yesterday at the 50% retracement level of its recent down move, and overnight slid below the 38.2% level, which it then used as resistance. Part of the move in favor of the yen was attributed to Japanese companies repatriating funds as the Japanese fiscal year comes to an end. Data from Japan was mostly positive, with the manufacturing PMI posting its third straight reading above 50 for September. A rebound in manufacturing will go a long way to help slow the pace of job losses in the Japanese economy. Industrial production in August was up 1.8%, a figure that was slightly below expectations, but is still the sixth straight month of gains. The pound-dollar pair was higher overnight, rallying 160 pips from its open to set a high for the week near 1.6125. The gains were led by a strong increase in the consumer confidence report released at the start of the global session. The rally stalled as it ran up against the level of support now turned resistance from late August and the 50% retracement level of the most recent down move. The weak U.S. ADP jobs report at the same time increased the risk aversion around the pair, which led the Greenback pair its overnight losses. UK consumer confidence jumped in September by the most since 1995 as optimism about the economy's prospects rebounded. The GFK index rose to -16, the highest since January 2008, from -25 the previous month. The increase was driven by a 13-point increase in the outlook for the economy for the next year. Both confidence in people's own personal finances and the general economy for the next 12 months rose to positive territory following a year of negative readings. The Aussie-US dollar pair broke above a level of resistance overnight, climbing to a new one-year high of 0.8845. The pair had been in a sideways consolidation pattern for the past 2 to 3 weeks. A positive retail sales figure was the catalyst for the gains today. The data could help bring the Reserve Bank of Australia one step closer to raising rates. RBA Governor Glenn Stevens said this week interest rates will need to rise in a timely manner to avoid the emergence of imbalances in the economy. The central bank meets early next week, though a move to raise rates is more likely in the next November meeting. Australian retail sales posted a better than expected 0.9% gain in August, led by a 2.4% increase in department store sales. The data adds a positive counterbalance to the idea that the economy will slow as the impact of the government's massive fiscal stimulus fades. Finally, Canada released its monthly GDP figures for July, which disappointed forecasts by showing a flat reading. Expectations were for a 0.4% monthly increase. Producer prices, meanwhile, hit expectations just on the mark by rising 0.5% in August, mainly as a result of rising petroleum and metal prices. The weak Canadian GDP release did not seem to affect the loonie adversely, with the US dollar-Canadian dollar pair falling in favor of the loonie, extending the pair's decline to 300 pips since it hit the 1.0985 level on Monday. Today's low tests support from mid last week, while oil prices were up $3.90, or close to 6% today, climbing above the $70 a barrel level, which was also a factor in loonie strength. The upcoming session continues the flow of fundamental releases. Tonight, Australia posts its manufacturing PMI, and Japan releases its quarterly and very influential Tenkan survey of manufacturing, along with its retail sales. Overnight, Germany posts its retail sales, while the Eurozone releases the final versions of its manufacturing PMIs and its unemployment rate for August. Tomorrow, the US has a slew of reports on tap, including data on personal spending and income, weekly jobless claims, the ISM Manufacturing Index, pending home sales, and construction spending. There will also be testimony from Fed Chairman Bernanke on financial regulation before the House Financial Services Committee. And that wraps up today's coverage of the Forex market. Thank you for joining us here at CMSFX.com, and happy trading.